So pretty much a mixed bag when you see what's happening on the Brent crude price, because we're worried about supply constraints there. But gold is coming under pressure. We've got platinum under pressure and copper also taking a big knock. Is this because we're seeing a stronger dollar today, or are we worried about the overall fundamental factors within this space?
Yeah, I think that's right. I think mainly to me it's about dollar strength at the moment. So we've seen that in the last month actually gold has been the worst performing market out of all the metals. And of course it is particularly vulnerable to and linked to the dollar. So that's tended to drag down gold as well as some of the other precious metals. I think the reasons for that really is gold's had a pretty tough time in the last few weeks. So we've seen kind of Bernanke, as you say, backing away from possible QE3. But also some of the investor flows for gold have been pretty mixed. So we saw a pretty hefty sell-off from the US net spec position came out at the beginning of this week. And also, of course, those imports by China have been relatively subdued compared to where they were. So Chinese imports not as good as they were. And, so that all those things really have weighed on gold, we think.
Would you say that gold is just really counting on the fact that we do see more monetary easing, or do you think that it can actually hold its own at around these levels, perhaps a more decent level than one would argue it's sitting at around $1,920 an ounce, which was the all-time high that was hit last year?
Yeah, I mean, I think most likely we're going to see gold kind of trading between 1,600 to 1,800 in the months ahead. So could be a little bit more downside. We're kind of testing and breaking down through some of those moving averages around 50 and 100 day. So, it looks a little bit mixed for gold at this point, but I don't see much downside, I have to say. I think what we've seen in the past is that central banks often step in on these dips in gold, and physical activity from Asia normally picks up as well. So I think a lot of people are still pretty bullish about gold in terms of the medium-term prospects. We've had a conference this week in the US talking about, still talking about getting back up to $2,000 an ounce, which, I actually would agree with, that we could see those kind of levels in the year ahead.
What is it going to drive it there, would you say, Daniel? Because, I mean, it seems the worst is over in Greece. We even saw the CDSs being triggered. We are worried about the rest of the peripheral Eurozone. Are you expecting more bad news down the line, or do you think a negative interest rate environment that is going to sustain itself through the year will also be a very good potion for gold hitting $2,000?
Yeah, I mean, I think ultimately what we're going to see through this year is a slowly improving macro backdrop. So obviously the safe haven inflows into gold are going to be relatively absent. But I think from a kind of portfolio perspective, I think people are still looking to fairly aggressively increase their exposure to gold in their portfolios. So, on the one hand, you're going to see more money coming back into the markets generally, which will lift gold. Again, of course, Asia is pretty critical to this. So there's still enormous appetite there to increase holdings of gold for both investors and in the jewellery space. So those kind of underlying drivers will remain pretty key, I think, as we go through this year. And gold's often one of those markets where it's darkest before the dawn, I think. So we've seen this many times over recent months. There doesn't seem to be that many reasons to be positive, but actually people still take a bullish medium-term view on it, and therefore I think they'll be picking up at these kind of levels, I have to say.
Yeah. Okay, so let's also touch on platinum, because platinum has been under the spotlight because of a lot of the supply constraints out of South Africa, but not nearly enough bad news to push the platinum price higher. Some say we could actually see a deficit in the platinum market this year. Do you agree with that?
Yeah, I mean, I've been very bullish on platinum for, a good few months and longer, really. So I think, platinum's been one of the best performing markets this month, and of course it's back above gold for the first time for quite a while. So I think that tells you something quite important, is that it's still outperforming within the precious metal space. And we saw a very good bounce as well, of course, from the, once the Impala situation settled down, we saw a very platinum pull back, but then bounced pretty nicely up from those lows. So I think there's still a lot of appetite to get into platinum. The investor flows remain quite strongly positive, and I think it's a very good structural story. So on the auto side, we've seen some very good figures out of the US, for example, where car sales are now up by about 30% from their low back in the middle of last year. And as you say, on the supply side, still very vulnerable to South Africa, where, let's be honest, the safety shutdowns are going to carry on for, the foreseeable future, and a lot of producers are going to find, the operating environment pretty tough, I think, in the year ahead.
So let's go back to where we see copper going, and we're just speaking to some technical analysts yesterday and saying that, given the strong growth in the Baltic Dry Index, they are expecting even copper to rise down the line on the back of this. Are you using the Baltic Dry Index as a good indication or indicator as to where the overall copper and dry bulk space could actually go?
At this point, I don't think it is really a good indicator. I mean, we've seen just an excess of ships come into the market there, and I think it's kind of lost its connection to the wider commodities complex. But I mean, the important thing for me on copper is, it's continued to rally through this year despite a fairly weak backdrop from China. So I think we're getting up to a kind of very interesting point. So around about 8,700 would be the previous high. So I think if we can break back above that level, it does really show that the market's taking a pretty bullish view on gold from a medium-term perspective. And we still have a target of 9,180, which we think we can get to in the months ahead. So I think if you look at the wider fundamentals for copper, it's a similar story, which is that production and supply side is extremely weak. And even though China is not quite as good as we might have liked, it's still good enough to keep the market in deficit, to keep those LME stocks falling. And I think it will still be a good year in the year ahead.